So global Islamic finance industry landscape. I know, mashallah, you guys are more senior than me. You have more knowledge than me. But just to understand the perspective here. So industry stands as of year 2018 at 2.5 trillion dollar assets. We are aiming. The target is to be somewhere. If we go with the same growth rate, we will be at somewhere 3.5 trillion in next 4 years. The compounded annual growth rate today is 3.5 year on year. The projected is 5.5 or maybe more. It's just a number. It could be 6, it could be 7, it could be 8, depending on how aggressive we go with that. And inshallah, that's our aspiration, that we need to increase the asset share. We need to fight riba, right? And we need to provide best of both of world, best of two things: the best product and services, technology enabled, which can compete with any digital conventional bank or a new bank. Plus, it's a Sharia compliant. That's the beauty of it, and I think we can position it uniquely. There's going to be absolutely a unique product for Muslim or non-Muslim, inshallah. And then with that industry, how many banks are supporting it today? We have total close to 1,500 IFIs, including the window operations. The window banks, uh, we see the distribution of 2.5 trillion is more in Islamic banking, 70%, followed by the Sukuk, which is 20%. So about 90% is more on assets, Sukuk and Islamic bank, right? They are driving it. So what we need to do to propel those, what engine we need to fit in those two vehicles to hyper accelerate the growth. This is what we will discuss today. So holistically, Islamic banking growth has slowed in 20 from if you compare it from 2013. So if you 2012, if you pick up 2012, which is 1.7 trillion, to 2013, which is 2 trillion, we are talking about 70% growth. While there's a dip in 2014, and then there's a normal growth rate, but it's not as we were having 2013 or we were having in 2006, 2005, right? Double digit growth, mashallah. So historically, to 6.2 compounded annual growth, expected 8.5, and again we need to inshallah increase that number. Islamic finance asset spread. So now that 2.5 trillion, where it belongs today. So mostly it is in Iran, Saudi, Malaysia, UAE, Qatar. So if you combine it, club it, so it's like more in GCC and Malaysia. Okay. Uh, no, not much impressive growth in Bangladesh, Pakistan, Turkey, Indonesia, all those, Nigeria, beautiful, big demographics, big population size there. Bangladesh, 161 million population size, Nigeria 195, Indonesia 267, Pakistan 210 million close to. So a big chunk of half a billion people, and then the average is around is hovering around 9 to 15, 16% at max, right? Indonesia, take an example, 267 million, the largest Muslim population, and 9% asset of Islamic finance. So something is wrong. So we need to, I would not say wrong, it's something we need to do to inshallah increase that, to hyper accelerate that. So we see the concentration is there on those three markets. They own the 65% share of this entire industry, and now we know we need to grow and do those other geographies, those unbanked population we need to target. It could be microfinance model, could be retail model, could be a small business model, could be any sort of banking, right? But what platform we should build to enable as an enabler. So why growth? Question we should ask, that why growth is slow. It's not whatever what we expect, what we aspire, and mashallah, we are working towards it, and we aspire it to be overcoming all the conventional assets in any country, right? Whether Muslim country or non-Muslim country. So to reach its potential, Islamic banking would have to grow outside the mature market that we know as number one, very concentrated. Number two is due to the scaling factor, their high operational cost, pressure on margin, uh, a very expensive upfront capex they need to invest to scale, to invest into infrastructure to grow, to go somewhere. For example, from 100,000 customer to 3 million customer, if they want to achieve that growth rate, right, and they want to grow it, and their resources are aligned, but if their IT is the same legacy system, they can't do it. They have to reinvest on a lot of infrastructure. so they are not able to grow, and so they need a lightweight, quickly agile, and a good infrastructure which does not cost much, but it provides them the opportunity to scale without any hesitation, without any front loaded capital expenses. So here's a Sibaki survey on Islamic banks, and then we see they have characterized IT, the information technology, customer attraction, retention, risk management, return on equity, product offering, service quality. All those are their top concerns. So this is where they're struggling with. So right before we go into period, these are their concerns today.
Islamic finance learning made simple and memorable.